Startup Office Hours. I'm Scott Fox. I'm your host here from sunny Southern California. It's lunchtime here, so I'm turning on my camera to do what I can to help all of you across the world who are early stage founders. I'm a volunteer. I run a volunteer group called the Startup Council, and our mission is to help more people get involved in the startup community. Why? Well, making money is nice, of course, but it's really to make the world a better place. I'm optimistic that entrepreneurs can make progress in a positive way. We've all seen the politicians are making a mess of it. So I'm here to help you guys and gals, of course, to do what we can together, sort of the rising tide lifts all the boats sort of thing. So I'm glad that you joined me today, and I hope that you'll participate. I turned on the chat room then. And if you're joining us from LinkedIn or YouTube or Facebook or anywhere else you're finding this online, thanks for being here. So today we're going to talk about your questions. That's really the content. And I don't have all the answers, like I was just saying. If you have a comment or a question, please put them in the chat room. I don't have all the answers. You guys can help each other. I'm just the guy with the microphone today, or almost the microphone anyway. So love to hear from you. Let me put up the on-camera link. We've got a couple people. Will and Alan are in the backstage here, but here's the link if you want to join me on camera. This is the best way to do it. And we've had some trouble with that link. So if that doesn't work for you for some reason, let me know. And I'll give you the more direct one if necessary. In fact, you know what? I'll put it in the chat room. Let's see. Right here, chat. So this is the long one. You don't want to try to type that in, but maybe you can click on that one if you want to join me live. And that would be great because that's more interesting, right? More interesting than me just talking. All right, so let's do a couple quick disclaimers. Let's see. Well, please invite your friends. That's always a good idea, right? It's more fun with more people. But this is not qualified legal or financial advice. You should consult your own professionals. Past results are no guarantee of future success, and all those side effects that they share on the drug commercial warnings, those all apply here. This is being recorded online and will be shared. So please don't say anything too confidential if that you don't want shared. I'd love to have your comments. And of course, likes and subscribes, blah, blah, blah. Okay, so there's all the stuff. So let me put up the on-camera link again, and I do encourage you to come and join me live. We're going to get started there. It looks like Will and Alan, if you guys could both, there's a chat room available to you guys. Can you just put a quick version in the private backstage chat to let me know what you want to talk about so I can work it into the show, and we'll bring you on camera in a couple minutes here. All right, so that's the preamble. So who am I? Why are we here? Oh, here's Masha. Great. Okay, I guess the links are working. So I'm Scott Fox. I'm a serial internet entrepreneur. I've been doing this for 25 years now, it looks like, raising money for startups, working in startups, buying and selling startups. And these days, I'm mostly an angel investor. I spend most of my time investing in startups and sitting on boards and advising younger people how to make their dent in the universe. I've written these books behind me here. The three in the middle are in English, and the others are foreign translations. You can see Japanese and what's that one? Polish, I think, Russian, Vietnamese, Turkish. So those books are in a bunch of languages. If they're helpful to you, that would be great. They're all on Amazon.com, and they're all about how to. They're from an earlier part of my career, really, when I was, how to quit a corporate job and start your own thing. That's what those books are about. And the most recent one people always ask is Click Millionaires, the blue one, Click Millionaires. And those are on Amazon and in many languages. And I donate the money to charity. So if they're helpful to you, I hope they are. And then the money goes to charity to fund college scholarships back in inner city Detroit, where I grew up. So it's a win-win if you're interested in that kind of advice. All right. So why are we doing this? Well, I think that the world could be a better place. And the most optimistic, productive group of people I know is here. It's you guys, right? It's entrepreneurs. We get shit done. And I'm proud to be an entrepreneur. When I was younger, working for a big company was the only really sort of credible path, at least in the world I grew up in. Or you could be a doctor, right? Or a lawyer, or, engineer, the professions, right? But working for a big company was the goal. And you know what? I tried it. I tried it several times, did very well at it, but hated it. And I'm an entrepreneur. I like to do things. And by things, I mean finding problems and solving them that help people. And I hope that I can help you do that today as well. So Well, that's enough about me, and let's move on. So let's get to some of our questions. Like I said, folks backstage, Masha, Will, Alan. Will, it looks like you're on twice, so I probably only need one of those. There's a private chat back there. Can you guys type in and tell me what your questions are? Like I said, so I can prioritize who we bring on in what order. Okay, and let's do a quick shout out. Let's see. Let's do a quick shout out to our folks in the chat room. So let's see here who we got here. Okay, so first of all, big shout out to Paul, who told me my microphone was not on. Bonus points to Paul. And Juan said it first. Sorry, Juan, I missed that. And I saw Paul's. Okay, and Gregory also, welcome to you. And welcome, Leopold. Hey, tell me where you are. Next pitch from Culver City. Hi, nice to see you. Ali L, hello. First time subscriber. Hey, Grace is here in Orange County. Gregory Fox. Okay, we'll get to your question. And next pitch. Have I ever invested in equity crowdfunding campaign? Yes, many of them. We can talk about that. This is Ralph. Oh, hi, Ralph. Okay, got it. Luke and Jake from Irvine. Okay, Orange County in the house. Paul's from Oregon. Excellent. And I know we had a bunch of RSVPs from overseas as well. So those of you who are in Europe, there was one from Bulgaria, I think, which was maybe a first for us. And Lynn, I know you guys are up late in the evening, so thank you for being here. And some of you from the other side of the world, it's what time is it over in Australia? Yeah, pretty early in Asia Pac right now, right? So welcome to you and thanks for being here. Okay. So, okay, Alan, right. I remember that. Yes, we'll let you on to do a little pitch for your event in a couple minutes here. Hi, Masha. Nice to see you. Can you tell me what you want to talk about though? And Will, what is it? Can you give me some sense of how to run this? Okay, guys, I need one more step of help. And Katrina and Juan also, just there's a chat room, you guys, if you're backstage, can click on. Just tell me what you're going to talk about so I can lump them together or whatever makes the most sense. Okay, and Anaheim Hills and New York City and Lake Forest and London, there we go, and Berlin, excellent. Hello, Hector, and Guten Tag, and let's see, what's that last one? I can't quite see it. Another Irvine, okay, and I missed one of those. Walnut Creek, NYC, excellent. Okay, good. All right. So we got a nice crowd. And hello from Windsor and Vancouver. There's the Canadians. There's always some Canadians here. All right, nice to see you guys. And Jiyoung, I think you sent in a question. So if you'd like to talk about that question, please please come on camera, okay? And Chicago. There we go. Cool. All right. Let's. And Luke, you too, right? You sent in a question. I did see that, but I need you to come on camera if you want to talk about it. So here's the link again. And if that link doesn't work, scroll up in the chat room and I can you can join me backstage. Okay, there we go. Down under from Perth. Excellent. Hello, Eagle Shared Services. Victoria. Okay, good. All right. Okay, so enough. That's all fun and exciting, but let's bring some people on camera. Okay, so Will. Okay, well, I guess we'll go with Will. Will gave me the best description of what he's doing. So turn on your cameras there. I say Will's is on, and then Alan and Juan, Katrina, Masha. Please tell me a little more what you want to do and turn on your cameras. Otherwise, I don't know that you're really there. Okay, you don't come on camera until I bring you. But so here is new friend. Will? Oh, Will, you're gonna mute. Sorry, hold on. Can you fix that audio, Will? You gotta mute, I guess.
Can you hear me?
I can hear you.
Okay.
A lot of background noise. I can't keep you on if it's going to do that. Is there anything else you can do about your microphone?
I don't hear anything, but okay, now I have it.
Okay, maybe you just need to talk.
Okay.
Nice to meet you. You look familiar.
Yeah, I've been on a couple of times in the past, like right at the beginning of COVID pandemic and stuff like that, and before.
Okay, nice to see you.
Pleasure.
So what's on your mind today?
Well, basically, I just wanted to get some information about the fundraising and stuff like that. I'm contemplating whether I'm going to launch and let the product do the funding, or to bring in fundraisers to get a kickstart, to say.
Yeah. Okay. Well, okay. Those are good topics. What's your question? Can you be more specific?
The question would be, I guess, what would be a good percentage to give up for the um, initial fundraising if I went that route?
Okay, sure. So what's a good percentage to give up for, and you're talking about equity, right?
Yes.
Okay. I, um, sorry, I'm gonna mute you just because I'm getting feedback, but I'll bring you back or wave at me if you want to interrupt me if I get it wrong. Okay. Um, okay. So let's talk about a percentage of equity. So the reality is, so this is a valuation question, really. Most people, there's fancy ways to do valuations and there's easy ways to do valuation. The fancy ways are things you calculate, you do a bunch of spreadsheets, right? You calculate how much money this venture will make after X number of years, then you discount the cash flows backward. There are valuation official methodologies like Dave Burkus. There's the Burkus method. There's lots of clever ways to do this. The problem is those are all kind of house of cards because they're built on assumptions about what an early stage business is going to be. And when you build assumptions on assumptions on assumptions, you pretty much end up with BS. But you got to pick something, right? So here's the truth. Most early stage startups are valued between, say, $2 and $4 million. So let's call it $3 million. All right. So that's not the right number. It's not the wrong number, but you need a number. So if it's $3 million and you want to raise, say, $300,000, roughly speaking, that's 10% of the company. That's kind of how it's done. So, and again, there's pre-money, post-money. You can get a lot fancier very quickly. And 3 million might be high. I'm talking, say if you had a 3 million valuation, you probably already have at least a prototype or a product, maybe an initial customer or two. This isn't like just a complete, blue sky idea. If it's that early, you might be more like at $1 million or something. But the idea is that both the investor and the founders and the founding team, they want to meet in the middle at a place where the investor feels like they get enough of a piece that if things go well, it will grow into something meaningful. And you, as the founding team, don't want to give away, half of your life's work for, peanuts. So it's a tension, it's a negotiation, and there's no official right answer. In the earlier stage you are, the fewer real numbers you have. So it's kind of like a used car, like, hey, it drives great. You want to buy it, it's and you got to meet in the middle. So, okay, he's waving his hand at me. I'm going to turn his mic back on. So hopefully that was in the right. Let me see. Here we go. Okay. So how was that? Was that in the right direction?
Yeah, and the thing is, I've already invested about 1 million in it, and the product when it launches, it will launch on three platforms: iOS, Android, and desktop.
Okay. Wow.
And there is it's a premium model with subscription base, but has a free basis for advertising as well. So that's pretty much I would estimate conservatively maybe 2 months away from that launch.
Well, congratulations. That's a significant thing. Anybody in the chat room who has a spare keyboard to give him a hand or an applause emoji, go ahead. That's great work. Well, congrats. Just quickly, so I kind of understand a little more. Is it a business targeted application or consumer?
Both. We're like in the middle.
Okay.
It's a matching app putting business and consumer together based on their common interest. Like if the consumer is interested in say sporting goods, then of course the sports market will be matched with them, based on specifically what they want, and the algorithm will actually do the matching for them.
Huh, okay, interesting. That sounds exciting. Okay, so but you're right, that changes the math, doesn't it? So that's why he was waving his hand at me, everybody, because that's beyond seed. Okay, so if there's $1 million in, and presumably a bunch of time as well, right?
Yes.
And it sounds like there must be some other people too. Is this all you solo?
Yes and no, because of the COVID and that
Uh-huh.
um, a lot of people were laid off until we get closer to the launch. So there was a lot of people that were involved initially,
Yeah.
but rather than just churning that money, waiting
Mhm.
to get to that, we decided to lay off, and then we'll bring some back on and bring
Yeah.
some new people on.
Got it. Okay. That affects the equity shares, though. That's what I was driving at. So, okay. So if you got $1 million in, well, obviously you want a valuation that's more than 2 million, right? So,
Yeah.
I guess the answer doesn't change that much though, because it just gets higher, right? It's still a negotiation. It's a horse trade, but you're probably at a number like 4 million or something, right? The trick with finding investors is you got to find somebody that's interested in what you're buying, right? This is really sales. And I'm going to mute you again because we're getting some feedback. At least I am. But wave at me if you need to. I do have a question. So there's no revenue, right? There's no revenue yet.
No revenue.
Okay, that's the piece I was missing. Okay, so if there's no revenue, you're kind of back where you were. You just have more money sunk into it, and you presumably have a real product. People in the chat room chime in too, because there's lots of ways to slice this, but I would roughly say this is you'd probably be trying to value it at 3 or 4 million and hoping that you find somebody that's interested. The trick is to find somebody that's interested, right? And to do that, I think you would really want to be looking at angel investors or VCs who have a track record in this space, right? That's the trick, is you don't just want to talk to random investors. You want to talk to people that already know this space, because you've already gone so far down the track. But you don't have any revenue, and that's a little bit unusual these days, at least in software. So I would be thinking a lot about taking some of the money that hopefully you have a little bit of money left and running some customer tests or demos so that you could say something like, I spent $1,000 on Google ads or LinkedIn ads or whatever, and I got this many leads, which converted into this, which might then suggest that if I had $1 million to spend, I could generate this kind of revenue, because that's the arithmetic that any investor is going to be looking at. And you don't have those other pieces yet. Even if you assume the product is perfect and amazing and is going to take off like wildfire, investors they're not religious about this. It's not just about faith, right? It's about like numbers. So if you have some numbers to demonstrate some kind of trajectory about it, that would really help you a lot. And the reason I bring that up is because that would support a higher valuation. Okay, unmuting again.
Yeah, and you just touched on it, because I was actually looking at 6 to 1 year of revenue generation and sales before bringing in an investor. That was what I was thinking about, whether to do that at the beginning or to do 6 to 1 year, year of sales and revenue generation and marketing,
Yes.
before doing that.
Then you're on exactly the right path, I'd say. So I would start at a $3 or $4 million valuation, but that will be informed greatly by whatever you can prove in the next 6 months to 6 to 12 months, right? Because then you have some justification for it, and that will totally change the conversation. You'll get much more respect and more returned emails if you have some kind of numbers to back because you're in it on a faith basis, right? Once you have numbers, other people will extend their the opening to you much more widely, I think, and that will drive the valuation up, right? I mean, if best case you put it out there and adoption just goes through the roof, you've got a tiger by the tail, then suddenly the evaluation looks like it's $6 or $8 million, right? And that'd be great, or vice versa, of course. So cool. Was that helpful? See you again.
Yes, it was. Yes.
Okay. Awesome. All right. Well, good to see you. Thanks for joining us. I'm going to mute our friend Will, and let's check back to let me just talk. Okay, so Masha's in there in the chat. Thank you, Masha. We'll get to that. And Wanwan, excellent. Okay, and who else is backstage? Luke. Okay, so Luke, you probably want to talk about what you emailed me about, right? Okay, so and Katrina, I haven't heard from you. If you can tell me backstage what it is you'd like to talk about, so I can work it in. And also, I need you guys backstage to turn on your cameras, otherwise I don't know that you're ready. Okay. And that would be Wanwan, Katrina, Luke, and Masha, please. Okay, so let's. So if you're late to the show, I'm Scott Fox. This is a Startup Office Hours. I do this once a month. We talk mostly about fundraising, but really about any kind of strategic issues that you might have for your startup. I'm a serial internet entrepreneur. I've been at this a long time, lots of companies, large and small. I'm an active angel investor. I'm an LP in several funds. I'm a member of Tech Coast Angels, which is a big angel group. I'm the chairman of Stanford Angels for Orange County in Southern California. I do this all the time, essentially. So if this is helpful to you, please do like and share and comment, all that kind of stuff. Actually, let me put that up. Please invite your friends to join us. I do this for free because I'm trying to help. They can come over to YouTube now and join us. And comments and likes and all that stuff really do help. And of course, the subscribes are the best metric. And then to help you guys, there's really this one, which is the startup event news. So this is the newsletter that we send out that has events like this, but this is a volunteer community service thing. I don't just promote stuff I'm doing. I promote everything I can find. So if you get on this list, you'll hear about lots of different events, especially as we grow. It's still kind of in beta, but there'll be more and more events and opportunities and pitch competitions and stuff on this list. So go ahead and sign up, and we'll be happy to communicate with you more. And I think that's it for the moment. So let's get back to, okay, let me say hi in the chat too for a second. Let's see. Okay, Windsor, Vancouver, Chicago. Luke, I got yours. Perth, nice to see you. I said that. Chennai, okay. Ragul, hey, thanks for staying up. Must be late there. Galaxia, provisional patent question. Okay, we can talk about patents in a few minutes. South Dakota, excellent. And Vishal and Jack Bogbakery and Claudia Ponte's got some nonsense in there. And you want to talk about patents also. And then Vibenex, Vikalp. And how do we find backstage? Okay, let me put that back up. That's the link. I'll put that in. And Vikalp, yeah, go Cardinal in Mumbai. Okay, nice to meet you. Here is the backstage link. All right. Okay, so let's get back to who we're going to bring on camera here. So we've got, let's see, here's Juan and Masha and Luke. All right, I'm just proving that there are other people here. Oh, and Alex. Hello, Alex. Don't know you yet. Okay, so what do we got here? All right, so here's a nice group. Look at this. Isn't this a friendly looking group of people? Hey, everybody. Nice to see you guys. So we've got, let me see. We got what? I'll turn your mics on. Let's see.
I can't hear anything.
You can't hear anything? Who was that, Alex? No, that was, who are you? Luke. The rest of you, can you hear me?
Yes. Hey, Scott.
Yeah, okay. Okay, hi, Masha. Nice to see you. So, Masha, what was I'm sorry, I didn't get to read the whole thing. What was the quick version?
Yeah, a question. So I have a question about raising funding for a very technical product. So I have an opportunity to be CEO for a company. It's an engineering software company. So it's like software designed by PhD engineers for PhD engineers type of thing. It's a real software that solves a real problem, but it's like such high level of understanding that most VCs probably will, miss the point. I've seen those kinds of things funded before. There's multiple companies exist that are public in that space. So it's a real solving a real need, but it's very niche and very technical. How do you explain it to VCs, or do you go after strategic partners instead in order to raise your first round?
Hold that. Well, I guess we'll do that one since she gave us the whole question. So Juan and no worries. And who's this? Alex. So Alex, what, just real quick, or can you, since I got you on camera, can you tell us what you wanted to ask about, Alex?
Yeah, so I've created some news aggregation software and done a competitor analysis, and it doesn't seem anything like it. It's for a specific region in the Middle East, and I'm bootstrapping right now, so I'm just wondering at what stage would be best to get funded, and if there's any advice.
Excellent. Totally, we can nail that one. That's my bread and butter. Okay, but we'll come back to that if you don't mind. Is it middle of the night there? What time is it where you are?
Absolutely. No.
No, you cut out. No.
Oh, sorry, I muted my mic. It's 8 p.m. at night.
Oh, not too bad.
It just goes dark.
Okay, all right, just looks dark. Okay, hang on. And then Juan, you said what we were going to do. Yeah, so we'll come back. Let me just check that. Full-time and fundraising. Yeah, so you have a fundraising question also. Okay, all right. Well, let's start with Masha since she gave us so hang on, Juan. I'll be back to you. Okay, all right, Masha, go ahead. So, okay, so highly technical, and does it boil down to, is it too technical for VCs to understand? Is that kind of what you're driving at?
Yeah, and I mean, I can explain it, but it's like quite a bit of simplification. So the question is, do I go after a particular type of VCs? Do you go after angels, or do they ever fund something that's that technical?
How much money are we talking about?
1 to 3 million in the first round.
Okay, and is there a product in market? Is there a revenue?
There is revenue, yes.
Okay. My preference is always to go more specific. The problem with raising money, especially, it sounds like you're new-ish to the company. Is that right? This isn't your company, right?
Yeah, I'd be new. Yeah.
Yeah. So the problem with raising money is that it's a sales job, right? And you can't raise money any more than you can sell things to people who don't know you or like you or trust you. And it's really that last one, the trust, right? And the hit rate goes up so dramatically if they already trust you, right? And if they've only just met you, it's going to be hard to trust you. So what I always suggest is you go for somebody that already knows what you're talking about, so that at least if they don't know you, they know the market. And you look like a smart person, talk like a smart person, and they know the market. Then you're down the road, way past where you'd be if you went to somebody that you don't know, who also doesn't understand the market, right? Because then you've got multiple hurdles. It's like, do I know and like and trust Masha? Like, is she the person I think could do this? And then what the hell is she talking about, right? I mean, those are high hurdles, right? I mean, you wouldn't buy a car like that, right? And this is much more than a car's value. So I always recommend people researching their investors a lot more, because people get so frustrated. I'm one of these calls a couple months ago. Somebody came on, a young woman, I think she was from DC, and she said, I'm about to give up on this startup thing because I can't raise any money. And I said, well, what are you doing? Well, I've been talking to VCs and nobody, blah, blah, blah. So, well, how many VCs have you reached out to? 4. It's like 4? Like, if you're shopping for a car, you'd look at more than 4 cars, wouldn't you? I mean, come on, right? Or a house. And this is like 10 times a house, right? Of course, you got to talk to like 40 or 400. And especially if you haven't done any pre-qualifying work, which she hadn't, right? So
Actually,
I'm not picking on.
Sorry to interrupt. Is there a rule of thumb of how, if you, in your experience, worked out, like if you're looking to raise so much money, you need to speak to so many VCs? A rule of thumb wise?
Yeah, the rule of thumb is 1 million. I'm joking.
Really?
No, there's no rule of thumb. It depends entirely on how targeted you are, right? It's like saying, if I go to the grocery store, how many things should I buy? Well, I don't know. What's in your kitchen already? How hungry are you? I mean, there's 1,000 assumptions, right? And I'm being facetious. I also know Masha, so I'm kind of teasing her, everybody. I'm not usually this mean. But the concept is you have to pre-qualify, right? I mean, this is the problem with a lot of founders, is that you don't have a sales background and you think there's a magic number, and there isn't. There's no formula for this. This is hustle. It's pure hustle. And you got to hustle and find the right people, and then at the right time and talk them into it. There's no short answer. To give you a little more to hang your hat on, dozens. I mean, it's got to be dozens, right? Because, and this will be in my next book too, even if you find a VC or an angel that does exactly your thing, the timing might be off, right? I mean, it's a question of timing too. Just like when you buy a house, right? Like you don't buy a house every week, right? They write checks when they have money and the market's doing right and their fund is new enough, but not too long in its life cycle, so all the funds are deployed, within this target. Hopefully the market hasn't crashed. Like a lot of investors right now, especially angels, are hurting because the tech stocks have come down so much. There's not nearly as much capital around. So even the right person at the wrong time isn't of any good, right? So it's going to be dozens for sure. And that's why research is so important. So I'm kind of repeating myself, I guess. Is that helpful?
So yes, thank you. And just follow-up question on the last point. I know you're working on a project.
Mm-hmm.
Do you have any suggestions of where to, if you were to look for a specific type of VC or an angel, any research?
Well, thank you.
know.
That's the perfect segue. Yes. So as Masha is hinting at very, very politely, so I've tried to answer this, and this is not a setup. She honestly just asked me that. No, I've seen this problem for so many years, but I built something called startupinvestorsdirectory.com, startupinvestorsdirectory.com, and it's just in beta. And I was going to get to this later, but thank you for the setup. This you can go.
I am
guys
not
can go look.
Unfortunately, just for the record.
No, well, everybody has this problem. So investorsdirectory.com has over 700 investors, and we're adding more every day as fast as my assistant can work it out. And it's only $50, and we have a coupon code. Actually, I was going to share that. I wrote it down. I would love you guys to beta test it. So there's a beta testing code, Bronze Beta 50, all caps, BRONZEBETA 50, Bronze Beta 50, just like it sounds, and it would be half off. So it's $24, $25 or something. And it's hundreds of investors, but they're categorized the way that we as founders, I mean, you and me, everybody listening, there's no database that I know of that doesn't cost thousands and thousands of dollars that lists hundreds of VCs by what they do, at what stage they're at. So we're trying to build that resource for you. I can't do it for free. This has already taken 1.5 years of development. So the cost is low, but it's hopefully going to introduce transparency to the market. So startupinvestorsdirectory.com. And thank you, Masha, for the setup there. I think I have a even a caption for that would help people find it. No, that's not it. No, I don't. Okay. Well, oh, there it is. Yep. Okay. So if you want to try this, guys, bronze, beta 50, and pick the bronze membership level. There's bronze, silver, and gold, like a lot of things. Bronze, beta 50, and I'd be happy to have you try it. But the deal is, though, I need feedback. Okay. So there's a survey once you do it. And if you hate it, that's fine. That's what we need to know, right? But there's a 3 or 4 question survey. I would love to have you take that and then tell us what you think, because the price is going to go up, right? I got to recoup the money we've invested on that. All right. Thank you, Masha. Okay, so did we cover your question enough? We've got other people here.
Yes.
Yeah.
Perfect. Thank
Okay.
you so much.
All right. Thank you. Nice to see you. And I'll see you maybe next week at the next Stanford event. Okay, so that's startupinvestorsdirectory.com if that's helpful to people. I'm going to move that up so it's easier to find. Okay, now let's get back to some of our other folks. Okay, so let's see. I think Juan was next. And hey, Juan, nice to meet you. Hang on one second. Sean is in the backstage there. And help, if you guys can type in, there's a private chat room backstage there. If you can type in just what you want to talk about. Just give me a one-liner. Is it fundraising? Is it valuation? Is it whatever, patents? Okay. And so Juan is here. Hey, Juan, so where are you today?
I'm in Sacramento.
Sacramento. Cool. All right. So nice to meet you. So
nice to meet you. Phil Druckmann told me to reach out to Orange County Startup Council. So
okay, I wondered. I don't have a big presence in Sacramento. So all right, we'll say hi to Phil if you talk to him. Nice to meet you.
Definitely do that.
All right. So what's on your mind?
My question is, should I focus full-time on fundraising? We have a product line, we have revenue, we have users, we have a utility patent issued in January.
Great.
But really need to get some initial, resources, financial resources to scale. We're in the sports betting industry, I would say. We do provide data and analytics.
Interesting.
But that's, and looking at how could Orange County Startup Council help us as well to get to where we want to do with fundraising.
Okay, sure. Well, nice to meet you and congrats. You got a market, and what kind of revenue are you doing, just roughly speaking?
About $6K in MRR.
Okay, MRR is monthly recurring revenue for those of you who are newer to the game. And that's great. That's an initial threshold that adds up to real money. Like kind of these days, the world has changed. It used to be that you could pitch a startup with just an idea, but software is so easy to build, at least for those who know how to build it, that you need to have some revenue too, generally speaking. So Juan has some, which is awesome. Okay, so yeah, fundraising starts like right away. Full-time, I don't know. That kind of depends on the size of your team. Or is it, you must have other folks. Are there other people? What's your role and what do your other senior leadership look like?
Yeah, I'm the CEO and product designer. I have a technical co-founder and a mobile engineer and a couple interns.
Okay, so you're the business guy then.
Yeah, I'm the business guy. Yeah.
Okay. So yeah, so it falls in your court. It's clearly okay. So yeah, I guess so. I mean, I don't know, what your day-to-day duties are otherwise, but fundraising certainly can be a full-time job, right? I mean, it could be you and a team even, right? Fundraising is all-consuming. And the trick is once you get on that life cycle, it's probably going to happen again every 12 or 18 months until you hopefully, go public or get acquired. So it's the sort of function that you want to build into your org chart, just as you would, finance and marketing and HR and all the other things, engineering. So how to get started in that? Well, this is a great start, right? My primary recommendation is to go to things like this and spread the word. As you heard me talking about with Masha, most investors invest with people they like in fields they know, That's where it starts, right? Even the big guys, you generally need a warm introduction to get into a big VC firm. And certainly if you're talking individual angel investors, you're talking to the guy or gal that writes the check, and they're definitely going to want to know you personally and appreciate what you're doing. So it's a relationship-based business. And so I can go on and on. Is this in the right direction? Is this helpful? Or
it's definitely helpful. Thank you.
Okay. I guess I would, to be more specific, I would especially look, like there's several like vectors where you can leapfrog forward in a relationship with investors. One, like I talked about earlier, is that industry, right? So for you, I'd be looking at people in sports betting. Who's made money in sports betting? There got to be some people, right? Like go look at DraftKings and FanDuel and whatever, and figure out who got rich when those guys went public, right? Because they're probably interested in doing it again, right? And they have expertise, and they may not know you, but they'll give you the benefit of the doubt because they know the space, right? The other ones are, of course, friends and family, because those people may not understand the business, but they understand you and they like and trust you. So you can leapfrog the relationship cycle by having a personal relationship before the company. The other one, and this is where I'm going, is geographic. So in Sacramento, I don't know what kind of local VC scene there is, but there may be organizations there, an economic development board or different groups that could connect you. There might be Sacramento Angels or something, or you're close enough to the Bay Area, you could tap into a lot of the Bay Area stuff, right? I would be looking at those things. All of you, I would go out, everybody listening that wants to raise money, I would look in these kind of areas, right? Think about your friends and family, think about the industry you're targeting, and then think about your geography. And I guess I'd add a fourth one, which is your school. Like if you have an alumni network because you went to Harvard, you're in better shape than most people, right? That kind of thing. But it doesn't have to be Harvard, right? It could be your local community college or whatever. Or you're a veteran, or you're a woman or a disabled person or whatever. There's all these sort of different angles on relationship networks. And there are increasingly investors targeting and trying to help all of those things, right? So I would go out on the web, find the organizations and sign up for their mailing list. That's what I'm driving at. The easiest way to learn stuff is in small bites, just like if you try to learn Spanish in high school, you bit by bit, or if you didn't grow up speaking Spanish anyway. And this is the same thing with investing, right? You get a couple newsletters every day and read a little bit every day. And, after a month or two, you'll start to know the lingo and you'll start to recognize who the players are. And you'll eventually, say, oh, I should call her, right? That person seems to get what I'm talking about. And then maybe approach on LinkedIn, that kind of thing. That's kind of a basic business development plan. Yeah.
Sounds good. Thank you.
All right. Well, nice to meet you, Juan.
Nice to meet you.
Yeah, hope to see you again. Okay, so that was our new friend Juan from Sacramento. All right, let's see. Okay, so I'm just getting messages that the guest room is full, so I'm sorry about that. I guess the system only takes 10 at a time, but we've got, let's see, Sean and, yeah, good question, Sean. I see that. Thank you. And Avakalp, okay. And then, okay. And Katrina, okay, all right. Sorry, guys. Let me just Bronze Beta 50 Sean was the code there for Startup Investors Directory. Let me just hit the chat room, and then we'll bring on. I think Alex was next. So hang on, Alex. Let's see. Room is full. Yes. Okay. All right. Okay, we're going to talk about patents. Mumbai backstage. Yes. Investors for a feature film. Okay. Joan, that's a great question. This is not the place for that. I have spent some time in the entertainment industry, but we're not talking about feature films or Netflix series here. I'm sorry. There are probably other places for that. This is more about growth companies like software companies and things like that raise venture capital. So you're welcome to listen. The principles are honestly the same, but I'm not going to spend a bunch of time on that one. Luke, sorry you couldn't hear anything. Looks like everybody else is working, right? We got people here, YouTube and LinkedIn and Facebook too, I think. Good. Okay, I have a couple. Oh, there's your question. Okay, good. Okay, great. Okay, sorry guys, I'm just trying to keep up with everyone here. All right, so I said we're going to bring Alex on. Here comes our friend Alex. Hello, Alex. Nice to meet you.
Hello. Nice to meet you too.
All right, so I'm sorry. Can you review what the question was again?
Yes. So essentially, I'll give you a very short background. I was doing a lot of research into the Middle East, and I couldn't find any way of obtaining news, so I've decided to build a news aggregating app which translates news and aggregates it. I've got to the point where I've got a sort of MVP, and now I'm looking where to go. Should I seek funding, or should I keep bootstrapping? The issue is, if I keep bootstrapping, I'm having to work a full-time job on the side, and I don't have the time to dedicate it.
Yeah, that's right. That is tough. Well, okay. So congrats on that. Cool idea. That sounds very interesting. And I love the ethic there of seeing a problem and trying to fill it, fill the hole, right? That's how it works. So the short answer is bootstrap. Always bootstrap if you can. The media makes a big deal and makes it sound like you have to raise venture capital to have a real company. That's bullshit. I mean, the best companies are the ones that spin off a few $1 million a year, and you never hear about them, right? And that's the good life, right? So this whole construct that we're talking about, I'm a fan of it and I do it, but it's really not necessary. To bring in investors is like a marriage. You have not just one spouse, but a whole bunch of them with differing opinions, different timelines, different expertise. It's a challenge, right? And the bigger your operation gets, the harder it is, and you have less time to do what presumably got you into it in the first place. So I think that's all fairly obvious. I just wanted to state it for the record. Venture capital is it's kind of like democracy. It's the worst thing except for everything else we tried, or something like that. I think Winston Churchill said something like that, right? So venture capital sucks. But if that's what you got, that's what you got. So I'll keep going. Am I on the right track?
Mm-hmm.
Yeah. Okay. So venture capital. So bootstrapping. So these days, bootstrapping is a good thing. It's hard to get any capital unless you have some traction. I think you're going to hear me say again, kind of what you've been so far, is that you can maybe able to skip some steps if you can find people who sympathize with the problem you've identified, right? People who might be Middle Eastern executives or investors, or somebody who also see that hole in the news market. And that could maybe leapfrog you down the road faster. But the in-between is friends and family, of course, and there's even credit cards, right? If a news aggregator, I don't know, and we don't have time, of course, to get into a long discussion, but that doesn't sound terrifically capital intensive, right? You're not developing a new cancer drug or something. And if you've already got it kind of down the road, assuming you're not haven't bankrupted yourself already, you might consider just doing it on credit cards for a while and recouping the money. I mean, that's a legit way to go. And I would honestly recommend it but of course it's risky, right? It's a lot more fun to use other people's money and then feel like you're not alone in the venture. There's a psychological angle to this where having investors and partners is significant and is really underreported and under discussed in the startup life, right? If you're a solopreneur, it can be lonely, and if it's all your money, it can drive you nuts. I've been there. All right, so I'm kind of just rambling. Is that an answer, or did we get there yet? Or what else would you like to ask?
No, it's very interesting, and like you say about the psychological things, there are things I've considered as well. So you're articulating what I'm thinking and helping with the answer.
Okay, good. Well, yeah, it's for real. And I make this offer. It's not a moneymaker for me, but I do private coaching calls that if you go to scottfox.com, anybody that's listening, if you want to talk to me for an hour, it's $400 or $500. It's not cheap, right? I do that to make sure you're serious, but I'd be happy to talk to anybody that has real issues, that wants to invest the time in really thinking these things through. Because I have done it multiple times and lots of angles to, sometimes you just need somebody to talk to. So anyway, if that's useful, I'd be happy to chat more. Okay, well, if you have more specifics, let me know, or come back next month, and we'll keep going. And good luck with it. It sounds like an interesting opportunity. I would also be really interested to hear, or just as an extra thought for you, as you structure the business, to think about how you might set it up for acquisition, because it sounds like something that would easily be sold to someone else, a larger media organization, basically. And we've seen that play out many, many times here in the United States as traditional newspapers and magazines faded away. There was this wave of blogs, right? And then each blog carved out a vertical, right? And then those verticals got consolidated and then sold to larger publishers, right? It's a very well trodden path, and it's probably happened in other markets, of course, but I know the U.S. market best. But it sounds like you're building something that you could run a pretty interesting business with a fairly small staff, fairly low capital, and then sell it, and be done with this in like 3 or 5 years, right? So that's exciting.
Yeah, for sure.
Yeah.
Super. Thanks for that. Thank you very much.
All right. Yeah, nice to meet you. I should mention both to our friend Alex and everybody else, I'd be happy to connect with anybody on LinkedIn. I'm on LinkedIn somewhere. I think I have that as one of these captions. Let me just see here. It's yeah, there it is. No, that's not the one. Sorry. Well, anyway, you should follow the Startup Council if you can. Join us and help us increase the reach of this this volunteer effort, trying to help more people answer these sort of questions. You can join us there, and if you do, there it is. There's me, Scott Fox, author. So if you see that over there, please, but write a little note, because I literally get dozens of these a day. So I really only accept those if you say something, it doesn't have to be an essay, right? Just say, hi, I saw the startup office hours or whatever, just so I know you're a real person and not a bot, or somebody trying to sell me some nonsense. And I'd be happy to connect with any or all of you if that sounds useful. Okay, and liking and subscribing, yes, please comment. The social media algorithms, they are driven by interaction. So if you can click on a few things, like a few things, leave a comment would be even better, et cetera, et cetera. Just trying to make this keep moving forward for everybody. Okay, let's go back here. Okay, up next was okay. Oh, I missed Alan. He had to go. Sorry, Alan. All right, well, I guess he's not here. Let's talk about, Avakalp looks like he was next. Avakalp. Here is Mr. Avakalp. Hello, Avakalp.
Hi, how are you, Scott?
Good, nice to meet you. Are you in Mumbai? Is that what you said?
Yes, I am.
Okay, so what time is it there?
It's 1:18 a.m.
I thought so. Okay. Well, thank you for staying up. Nice to meet you.
Yeah,
All
I
right.
wanted to experience. I saw this event. I was very interested in experiencing it. So yeah.
Great. All right. What's on your mind?
All right. So I'll tell you the situation a little bit. I have been working on this idea for almost a year now, and just 4 months back, I left my job to pursue it full time. Got some customers and had some really good feedback that I wanted to incorporate. But yeah, there was a lack of bandwidth, and I decided it felt the right moment to start raising money so that I can increase my engineering bandwidth and get into a quick feedback loop. Right now, it's been almost 2 months since I've started working on my pitch, and I started talking to investors, but there are some big investors in my network that I have not started reaching out to. Like I have Axel partners, Sequoia, Elevation partners, right? So I want to go to these people, but my mentors, like not mentors, but my friends who are entrepreneurs, right?
Mm-hmm.
They would keep giving me more feedback about my pitch deck, and I feel that I'm constantly improving my deck, but I never know when to start reaching out to right investors. Like when am I ready?
Right.
So that's
right.
my question. When am I ready?
No, that's a good question. That's a tough one. And the answer is both right now and never, right? Because right? It's like, what do? You got to go. And I think that's it. I think you're ready. I mean, you're never going to know unless you get there. I guess I would prioritize your investors, right? The targets that you have, and think about those who are the friendliest or most likely to be receptive, and kind of rank them, right? Because I wouldn't call them all on the same day and then meet them all in 2 days, right? Because as you're doing the right way. I heard you say you're iterating, right? You're taking feedback on the product. Well, it's the same thing with the deck and the process. So I would prioritize those folks and really be honest, especially if they're entrepreneurs who come from if they're investors who come from an operating background, they'll understand. You just say, look, I'm just testing this. I like your advice. And there's common phrase here, at least in the States. I don't know if it's common in India at this point, but if you ask for money, you get advice. But if you ask for advice, you might get money, right? So
I heard this from a friend, and then I found out that this is the starting line of Pitbull's song.
Oh, is it? I didn't know that was a Pitbull song. That's funny. I got it.
There's a Pitbull called "Feel the Moment." It starts with this.
Yeah. Okay. Oh, I never listened to it that closely. Okay, I'm gonna check that. That's funny. Okay. So anyway, so you've heard the line, obviously, right? So I would couch it as, hey, could I just get your feedback on this? And this is a work in progress. I'm flexible, both in terms of the content and the presentation, but also even in valuation and everything. This is early stage, and I just need, almost kind of like I need a friend. Could you help me out a little and let me know what I'm doing wrong, right? And if you go in with presumption, that's actually a little psychological trick. You go in and say, what am I doing wrong? They're naturally going to want to be friendly if they're the right person anyway, and assure, oh, you're not doing wrong. This is what you're doing right. And it puts them in a positive frame of mind, right? And then you just have to have discussions and hopefully over time, and it'll take weeks or months. But if you do that, with one person this week and then somebody else the next week, and you don't wait until you're so desperate for money that you've got 15 people and you try to see them all in the same week, or you're going to not make payroll, right? That's when people get in trouble. This is not like a movie premiere where it all comes out on Friday night, boom, and there's the big opening weekend box office. This is like dating, right? So is that helpful?
Yeah, that was very helpful. So basically, the way I had currently structured is I was trying to go with angels and the less relevant pieces first, but I think that isn't the right method. You're suggesting that all the relevant ones, I just paste them in a manner that I first get advice from the more friendly ones and then go on to the others who might need a better quality pitch later.
Yeah, I think that's right.
Thank you so much.
Yeah, learn, as you go. Think of about like school, first grade, second grade, third grade, because you're going to learn with everyone. But if you just keep iterating in your head and with your close circle of friends, you need new inputs. You can make better decisions with more information. So it's time for you to get more information, it sounds like. And if you present it that way, I think the meetings will be more friendly than if you kind of go in, as sometimes entrepreneurs do. Here's my deck. This is my evaluation. Here's the deal. Take it or leave it. And nobody likes that. And you wouldn't do that anyway. But I mean, just as an example, being friendly and open and asking for advice, I think, is the way to go. Cool. Well, nice to meet you.
Thank you so much.
All right.
Nice to meet you too.
Cool. So we're going to bring on Alan. Where's Alan? Here. There we go, Alan. Okay, so Alan has an event. There you go, Alan. Uh-oh, I can't hear you. Can't hear you at all. Uh-oh. All right, well, let me do it for you, Alan. I think I know why you're here. There's an event in New York City that Alan's presenting. It's if I recall correctly, it's a pitch night game show sort of thing. Oh, you're talking again. Let me just see. No, I'm not getting any of that, unfortunately. So pitch night game show sort of thing. Alan, why don't you put the link in the chat room? So if folks are in New York City, then they can come and join you. And we're helping promote that on Meetup in New York. And I think that's it. It sounded like fun. I remember that much. And that's probably about it. Okay, Alan, sorry about that. Hope you can make it to your meeting now. All right, cheers. All right, let's bring on, let's see. Alan, it's the other chat. It's a public chat. So you probably have to go over to LinkedIn Live or to my YouTube channel and maybe put it in there. The chat you're typing in is the backstage chat. Avakalp, do I leave the restream and continue only on YouTube? Sure, Avakalp, you can do either one. If you leave the backstage, that'll let other people come in. Okay, so, all right, so we're getting, wow, we're almost an hour here. Let me revisit the chat room, see who we're going to bring on next. I think it looks like Sean is next. Angels funding and seed funding. Yes, that's good. Yes, okay, so Sean is going to join us here if he's still, let's see, there's Sean, okay. Okay, and Luke is back. Luke, so hopefully you can hear and see us now. If you can type in the backstage chat what it is you wanted to talk about. Sorry, you told me. That's you emailed, right? Hold on. Oh, right. Okay. So we'll do that one. We'll do that one also. Your question is about moving from the Midwest to California, that kind of thing. Is that still, I can see you. Can you just nod or something? Yeah. Is that good? Yeah. Okay. Okay. So we'll get to that after Sean. Okay. Real quick, let me hit the chat room, trying to keep up with everything here. Sorry, guys. This is a lot of folks here today. Okay. Okay. I just added you on LinkedIn. Okay. Ali says, okay, added me on LinkedIn. All right. Nice to meet you. Okay. It's Michael. Hey, Michael. Okay. Okay. I think we hit most of these. Okay, cool. So let's bring Sean on, and I'll try to talk a bit about patents, and then we've got Sean and Luke. Looks like we're going to go past the hour today, but that's okay if this is helpful to folks. Here's our new friend, Sean. Hey, Sean. Nice to meet you.
Hey, how you doing? So it
Good.
seems to me like a lot of angel investors are really in the same kind of monetary numbers that seed funds are, as far as the amounts that they'll invest. It also seems to me, and this is kind of one of the things I wanted you to verify, that the amount of it seems like both of them work with a convertible note or a safe for the most part. They're obviously they're you know seed or pre-series A, where it's really hard to set a valuation, but they believe in your company. They're both looking for sort of the same type of return, so they're both kind of looking for a convertible debt or a safe note. Is there, in your opinion, obviously, if you can find an angel investor, they're easier to deal with. They're going to be able to close faster. But is there a benefit to using an angel investor that's going to put in 150 to 300,000 versus a seed fund that's going to put in that amount? Seems like the seed fund has more liquidity to do that. Angel investor probably has less, but seems like convincing an individual angel is easier than convincing the board of a seed, even if it's a small board, even if it's a couple partners.
Yeah, I think you're hitting all the right decision factors, and I agree. There's definitely it's a kind of a continuum between angel investors to pre-seed fund to seed fund, and in between that you have like angel groups, right, and syndicates that are also kind of almost seed fund-ish, right? So it's a spectrum. It's not that clear a dividing line. So you're right about that. Just to confirm your opening question. Is there a benefit? Well, I think you're on the right track there too, Sean. You thought about this, obviously. The benefits of having an individual would be around, like having one person to convince versus a group. On the other hand, having a firm, they have a number of partners and perhaps a larger network than an individual, because a lot of what you're getting, hopefully, is not just money, but advice and management input and maybe recruiting help or introductions to customers, right? So having a fund that has 3 or 5 or 10, staff is perhaps better than an individual. There's an emotional aspect to it that you kind of hinted at there. If an individual puts in 300 grand, they're probably going to be really on your ass because that's a lot of money to them, more likely than a fund, which has presumably 300 out of hopefully, 5 or 10 or 20 million. They'll still be on your ass, but it would be more in a professional way rather than like, I'm going to lose my house. You got to make me some money back, right? I need my money back. And that's a lot of the danger with friends and family type angels, right? If it's your cousin or your aunt or something, and they need the money back, the liquidity is an issue, right? So I would think about that. I guess another one might be that you didn't mention is the quality or the thoroughness of the due diligence. Individual angel investor may or may not have an established process for evaluating companies, whereas a fund, at least in theory, should have some sort of process and a committee, which might mean that they help you. It makes it harder to get through, but maybe also helps you get your house in order. I've worked with many entrepreneurs. I had lunch with one yesterday who are doing really well kind of on the outside, but they haven't really gotten their house all together in terms of all their documents signed and the contracts and intellectual property assignments and fundraising notes and safes and everything signed, and and that can be a problem later because you don't want to suddenly be at a Series B and turns out that your early contributors never signed their intellectual property agreements and you are now in trouble because they theoretically have a claim on the company, right? So a better due diligence process might help you nail some of that stuff down. I don't know. Is this useful? Is this the kind of?
Yeah. I mean, it's really interesting because, I had originally thought I went through a tech accelerator, and I thought, with our level of traction and where we are, we've got signed contracts, we've got some revenue coming in from those signed contracts. We're going to go out and get a safe note. And unfortunately, it happened exactly when there was invasion in Europe, and interest rates started going up, and then all the VCs really started pulling back. So what seemed like a really possible type of safe note investment a few months ago, now people are saying, we don't want to do safe, we want to do a evaluation. And I'm saying, well, I thought I was closer to a Series A. Maybe I need to go back and do another seed round. Maybe I need to go and find 3, 4, 5 angel investors and put them together in a safe note rather than going to VCs, because VCs seem to be really holding close to their purse strings right now, and it's been a little harder than I thought it was going to be to get the next round of funding going. Everyone wants a little more traction, a little lower valuation, just from where it is in the marketplace. So I'm really kind of trying to figure out, and it seems like there's a lot of angel groups. Obviously it's finding individual angel investors is maybe a little easier than getting a VC to invest, but between the angels and the seed, it really seems like there are a lot of networks out there, and you have some links and want to have some other ones, but it's really kind of pegging down. Is this an angel investment I'm looking for? Is this a seed round? And then what's the right type of person that's going to invest in it? It's a really fine line, and it's obviously completely different for every single company and every space. But
you're right about the timing. It's an unfortunate timing for you. I guess it's not a silver lining, but a small piece of this is everybody gets it, right? I mean, if you have to go back, take a step backwards, it wouldn't be held against you like it might have been in 2018. Like, why haven't you gotten farther now? Everybody is very clear what's happened, COVID, and then Ukraine, and then, stock market crashing. These are things that everyone would recognize, and I think hopefully not hold against you, right? Whereas if you had been done this in 2018 and you were going back, everybody sees that as a down round, or you need a bridge round, which is actually means you're not doing very well, right? So that doesn't help you in your progress in your pocketbook, but I wouldn't feel embarrassed by it. I mean, this is the world we live in, right? Nobody wanted that stupid invasion to happen. A terrible thing. Unfortunately, those are the cards you've been dealt, my friend. Sorry.
Yeah. Got it. All right. I appreciate it. Thank you.
You're welcome. I hope that's helpful. I'd also encourage you to, like you said, there are angel groups. That's our friend Sean. There are angel groups out there. Everybody go look around. There's the Angel Capital Association, ACA, has a list of all kinds of angel groups, and there's probably one in your town or nearby or through your university or something, right? And angel groups often have more appetite than individual angels, right? Like I'm part of Tech Coast Angels. You can go to techcoastangels.com, and we're the largest group, at least on the West Coast, in Orange County, Los Angeles, Inland Empire. There's several chapters, and we invest individually, but also we have a fund, and there's a lot of groups like that. There's even something called the Angel Syndication Network, where if you get in with a group like ours, and when we vote to fund your company, then we take you to the syndication network where it syndicates to other angel groups all over the country, so it can double the amount of money that's raised for a successful pitch. So I would look for resources like that, all of you guys, because if you can get through the screening process, it's better to hit 30 or 40 or 50 angels at once than one at a time, right? Just more efficient for you. And it also greatly increases the network that you have, people that can help you. So that's techcoastangels.com, if that's helpful. And again, startupinvestorsdirectory.com is the resource that we're building. And if you want to try beta testing that, the code is bronzebeta50, bronzebeta50. And I'll get you half off the $49 beta testing price. Okay, so Alan wanted to put this in the chat room. Okay, so if you'll be out of town on the 30th. Oh, I see. Okay, so I'm going to put this in the chat room. This is an event that's happening in New York City. There we go. Yeah. Oh, I put his email in there too. Okay. Sorry, Alan. Okay. So if you're in New York City, this is an event on the 30th. It's a live pitch. I think it's at a comedy club. So this is New York City specific. But if you're not in New York City, I think that's the link. And either way, you can email Alan and learn more if you'd like. Okay. So let's see. I saw my friend Athena in the chat room and some other folks. And then we're going to talk to Luke and we're going to talk about some patents. So let's see. Let me scroll up here. Good places to research angels. I just talked about that, but I didn't mention, so startupinvestorsdirectory.com is the one that we're building. It doesn't have a ton of angels yet, though. We're mostly focused on early stage venture firms. But I would go to angellist.com, because it's the list of angels, angellist.com. Let's see, we talked to Avikalp, and then Cameron, we'll answer this one quickly. Congratulations on your fine art background. Do you have a chance as an interior design startup? I'm sorry, I don't know anything about that. I'll just be honest with you. You certainly do, right? It's up to you. You're the entrepreneur. Make it happen. It's absolutely. That's not what we talk about here. We're talking about companies that raise venture capital money, really, and that's an interior design type company wouldn't be the typical profile for that. Let's see. But I keep mentioning, help each other out in the chat room, guys. I'm not going to be able to get to all these today. There's so many of you. There's some. Heard you only have one shot. Athena. Okay, so this is a good question. Luke, I really will get to you. Sorry, but this is a great question. Athena is a friend here in Orange County. She asked if you, with iterating your pitch deck, and this is kind of back to our friend from Mumbai's question. How receptive will the investors be if we keep coming back? So here's the trick. They will be as receptive as they are, as strong as your relationship is and how you position it. So if it's a pitch competition and you've trained for 6 months and now you're on the big stage and there's the panel of judges and you give the pitch and they don't like it, well, that was probably it, right? Because that was the context in which you were pitching. If you are trying to raise money and this is somebody you know or can know and get multiple bites at the apple because you have a relationship as a friend, this is what we were talking about a few minutes ago, and you position it as, hey, can I have some advice? I'd like to show you this, and it's really not very good yet. And I'd love your feedback. And then when they give you the feedback, you're like, well, I'd love to, hopefully I can follow up with you and show you the next version, right? And so it's a different, it's how you pitch the pitch, I guess you'd say, right? If the expectation is, it's Tuesday at 3:00 and Scott's showing up and here it is, it's all done, bang, 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 then you're only going to get one shot because you presented it as this is it, right? But I don't think that's the right idea for most seed stage or pre-seed projects. The idea is, hey, I've got an idea that's going to change the world. We're going to make a bunch of money at it, but it's still early. And could we get together? I want to just kind of show you. I got it mostly together, but you're an expert. Here's what I got. This. What do you think? And then you iterate and bring them into a relationship about it. And it's hard to find people that will invest that kind of time, right? I don't have time to do that stuff. That's why I do these things. I try to help a lot of people at the same time. But if you can find people like that, you will get more than one bite at the apple if that's how you present it, right? And that's how you build the relationship. Okay. All right. So here we go. Now this is, here comes Luke. He's been very patient. There he is. Hey, Luke, can you hear us now?
Yeah.
Okay, cool. All right. So let's hear Luke's question or story, and then we'll talk about some patents, and then we might be done. It's all yours, Luke. So where are you calling from today?
Kansas City, Missouri.
Okay,
and
cool.
On the left side of Missouri, if anybody knows it. Yeah, I have a business that I have I have a software and patent, and I don't remember exactly what I put in the question, but
well, whatever's on your mind. Whatever the short version of the question.
Not lose too much liquidity or too much equity to the investors and stuff like that, and Well, partly, I have it where it could be simplified, but it's security in the implementation of it and everything, and I'd just be kind of afraid of having like investors go and say, well, we're just going to put everything on Linux and make it simple, and then where it gets hacked and destroyed and all. It's kind of a health related thing, and also wanting to go and move to California. Maybe sounds nice. It's cold out here.
I'm from Michigan originally. I understand.
Gosh. I imagine you feel what I'm feeling.
Yeah, that's right.
Yeah.
Well, when you wrote in, you talked about, it sounded like the most direct question was you were worried about losing control of the company. You said, is it possible to not end up like Jack Dorsey with 4% of Twitter at the end of the day? Is that part of what you're asking about?
Yeah.
Yeah. Well, I think it's a valid question. You know, the control of a company is really hard to foresee because you can't foresee the funding, right? It's about dilution of bringing in outside investors. This is one of the reasons earlier I was talking about bootstrapping with Alex, I think it was. And if you can bootstrap, it's always better, right? Because then you're in the driver's seat. And if you need money later for growth, you can do it as loans instead of giving up equity. But controlling big company is really hard. My first company, I ended up with a decent share, but then we went out of business anyway, right? So it's hard to predict what's going to happen up front. I think that people like Dorsey, you know, I don't know his personal background, but I'll tell you the ideal of like the Mark Zuckerberg who controls things, or the Sergey and Larry Page who control Google with these super shares, or even Bill Gates, you know, it's really not a fair comparison. I mean, I don't know your background, Luke, but I'll talk to you and everybody else out there. I'm from modest means, right? I didn't have, you know, like Mark Zuckerberg, he dropped out of Harvard, sure, but he went to Harvard, right? And his parents are doctors. Like his dad's a dentist and his mom, I think, is a psychiatrist.
From what I understand, he also kind of screwed over his partner. Oh, sorry about that. He kind of messed over his partners and had them sign off huge swaths of their ownership, and
that could be right. So I guess what I'm saying is, if you're a regular person, it's hard to set up that kind of super fancy structure, you know, or because you need lawyers, you need expensive lawyers, like from the start. And as a founder, that's not what you want to be spending your money on, is protecting, you know, building a castle around a company that hasn't even proven itself yet. So I don't have a good answer for you, except that I think a lot of the examples, the media loves to talk about it because those guys are super rich and they have control. Everybody's dream, right? But I think a lot of them started on second or third base. You know, when your parents are or Bill Gates, you know, Gates, his dad is a big lawyer. Like there's a firm called K&L Gates. It's his dad, right? So he came in with like huge legal firepower looking over his shoulder. Of course he did well, right? I mean, not that the company was going to do well.
Well, his mom was on the board of IBM, and it's the reason why he got the IBM.
Okay, see, I didn't even know that, right? So this is like, if you're a regular person like me, I'd be psyched at 4% of Twitter, you know? I mean, I'd like, or rather at 40, I'm with you, but geez, you know, it's kind of like Instagram, right? You can't look at the best version of everybody else's life and make you feel bad about your own. You got to kind of own your own life and do the best you can. And frankly, a lot of people in Silicon Valley make their money not on the first startup, but on the second or third or fourth. And that's true with me. I guess actually I hadn't thought about it until it came out of my mouth, but my first company pretty much bankrupted me. But it taught me what I was supposed to do, and it got me into the right circles. And then I started making money, and now I make money by investing in other people, right? And so a lot of times it's quietly done, not by being, you know, Jeff Bezos. I built the world's biggest company, you know, or Elon Musk. And those are the money's still green, right? So I don't know if that's helpful, but I hear where you're coming from, and it's I guess I wouldn't worry too much about the control. Just if you can build something that makes a difference, you do the best you can, and then hire really good lawyers. That's what you got to do. So I don't know. Is that an answer? Oh,
I guess.
yeah. All right. Well, nice to meet you. Hope to see you again. Stay warm
Yeah.
there in Kansas City. All right. Cheers. Okay. So, all right. So I think we're getting near the end here. Don't have anybody new backstage at the moment. So let's talk through the chat room a little bit, and then we'll wrap up. So thanks everybody for being here. By the way, I'm Scott Fox. I'm running the Startup Council, which is a volunteer community service group designed to help you guys improve the world. Essentially, it's a stealth charitable mission, I guess. I've been doing this kind of thing for a long time, and now I volunteer to hold these office hours. If you can help me out, I'd appreciate it. Please click like and subscribe, or invite your friends. Sign up for our email list. We're going to get to some more questions here. I'm not done, but let me give you the sign up links again. Let's see, that's the liking and subscribing link, but where's the other ones? Let's see. We can connect over here if you want. And please follow the Startup Council once you get over there. Once you're on LinkedIn, if you do, then search for Startup Council and please follow us. That looks like this. And there's the link I was looking for, the newsletter. So if you want to get on the newsletter, and we are growing our services. This Startup Investors Directory that I was talking about is only the first of several new services that are going to roll out, designed by a founder for other early stage founders, because I think that the needs of truly early stage founders are misunderstood and neglected. There's just not enough support for the 0 to 1 phase of life, and I'd like to help you guys do that because it's self-interested. I think that we can together we can improve the world, and I think we need to. Okay, so let's get to some of these. Assuming you guys are still here, how many we got online still? Okay, a bunch. Good. Okay, so let's talk through some of those other ones I've been promising you. Let's talk about patents for a minute. There were a couple patent questions. Let me roll back up and see what they were in the chat room here. Let's see. Chat. Okay. So patents are an interesting area for sure. But they're complex. Let's see. Okay. Galaxia says, I filed a provisional patent for the progenitor application. What equity crowdfunding? 50,000. How do I do valuation, and what number do I use for safes? Want equity crowdfunding to get 50,000. Okay. Okay. Well, so I don't have enough information there, but I just ballparkish. And this isn't, sorry, guys, this isn't a patent question. This is more of a fundraising question. We haven't talked about crowdfunding today, although Ralph early on mentioned that. Crowdfunding. So you want to raise 50 grand in crowdfunding. There are a bunch of different platforms. I work with WeFunder, and actually I'm an investor in WeFunder and Start Engine, and I think another one too, but there's Republic and Seed Invest. They have all kinds of tutorials about this stuff. So that's probably the shortest answer, given that we're late in the show. Happy to talk more about that in a future show. But go look, see what they have. They will teach you. If you have a legit company, they want you to succeed, right? They get a percentage. So they will try to help you if they can. And I would go and look over there. And in fact, there are some links, those of you who are interested in crowdfunding, there are some links on scottfox.com that if you use like my referral link, it saves you the setup fees or something. So that's a benefit if you want to do it. I know there's one for WeFunder and Start Engine. There might be a third one, but that will save you several $1,000s, I think, at least last time I checked. If that's helpful, at scottfox.com, you can use those links, and that will lead you into the funnel where they offer the training and things like that as well. Okay, so I was looking for the patent thing. Okay, so A says, I have an idea for several mobile apps. Is it necessary to get a patent for those? Well, patents are never necessary. People kind of reach for patents as a form of security, right? So you have an idea. Ideas are not protectable. what is protectable is a thing when it's reduced to practice, meaning it's like actually happening, not just my idea, but here's how it would work to make the idea come to life. And that's what the patent office is looking at, is reviewing how it actually works. And so you don't need a patent to make the thing work. Obviously, you know that, right? You can build an app, right? If you want to protect it, then yeah, I guess you'd need an app. Sorry, a patent. Here's a couple of things though. Patents are super cool and valuable. They're not forever though. I think they're for 17 years, something like that. Somebody in the chat room could probably correct me on that. And they're territory by territory. So you would get a US patent, a UK patent, a China patent. Good luck with that, et cetera, et cetera. But none of those protect you from someone else seeing the same idea and figuring out a different way to implement it, right? Like if my idea is to have whatever here, green water bottles, and I have this specific production process and I patent the way to make this thing green, well, there's no reason all of you watching can't figure out your own way to make something that pretty much looks just like this, but it has a different way of creating and getting to this result. That a patent won't stop that. And then, of course, there's just flat out people who will copy you anyway and not worry about it. Like there's a lot of Chinese counterfeit goods and things like that, right? So patents aren't the answer to everything. And the short answer to your question is you should talk to a patent attorney because this is not legal or professional advice. Patents are a specialized area, but that's kind of some of the background pros and cons. Another thought for you quickly is that a lot of people choose not to do patents. Instead they use what's called a trade secret. And a trade secret is where you know how the thing is done and you just don't tell anybody. It's a trade. It's just literally a secret. And it's free. You just hide the ball and don't tell anybody. Because the problem is once you file a patent, that's published, right? It's published in the U.S. Patent and Trademark Office records, and other people can see how you're doing what you're doing. Your secret sauce is revealed. So a lot of people will just hide it literally as a secret, and they only tell the top people at the company that need to know. So that might be another strategy for you. Okay, what else we got here? Let's see. Okay, we talked to Avicalp, and we talked about Cameron's thing. Ali, what's the best way to network with investors post-COVID? Okay, and thank you, Avicalp, for helping him it looks like, out with that link. The best way to network with investors post-COVID, good news, you're doing it right now. This is it, right? You get on Zoom calls. There are all kinds of pitch competitions and webinars and meetups and things that are virtual these days. I would do that as much as you can. Try to target events that are relevant to your area. If you're doing a crypto thing, then you don't go to an aerospace pitch. But even if you do, you might learn something, and you still might meet investors that, maybe they do crypto aerospace. I don't know. Anything's possible these days. Another organization I haven't mentioned that I always like to plug is 1 Million Cups. Those of you in the United States may have heard of this. I don't think they're international. They might be by now. 1 Million Cups. Their website is the number 1 MC. I think it's .com, 1mc.com. Anyway, it's called 1 Million Cups. You could Google it. It's a program of the Ewing and Marion Kauffman Foundation out of Kansas City. And it's simple. It's every Wednesday morning all across America and maybe other countries at 7 or 8 a.m. Entrepreneurs meet for coffee. And at least here near where I live, they meet at the local university and they practice pitching each other and stuff like that. And it's a great place, maybe not to meet investors, although investors do go sometimes. I go to those occasionally. But you meet other entrepreneurs, and building your network of fellow entrepreneurs is a good way to then compare notes about investors and meet investors too, right? So I think I would check that out and keep networking online, and then you follow up by email. That's how it works. B Diamonds, you started your real estate company a year ago, haven't created any revenue. Are there any investors willing to help me get it off the ground? Great question. I don't know. Hopefully. I'm sorry. That's a pretty general question. I don't have an answer for you there. Okay. Let's see. Thank you, Scott, for not gatekeeping this very valuable information. Thank you, Ali. That's what I'm trying to do. Ali got it. So much of this stuff is it's gate kept. That's the modern word for it, right? It's hidden in this like clubby world of old white guys mostly, and they just think either they don't want to share it, they're too busy, or they forget that the basics aren't addressed, right? It's like once you learn to speak another language, you just speak it. You forget that you had to learn the verbs and everything, right? And this stuff is valuable. I think it's valuable, and you guys all showed up again, so thank you. Again, please tell other people. I'm trying to get this stuff out into the world so that more people can participate. That's exactly what I'm trying to do, Ali. So thank you for being here, and please like and share so other people get the idea. Okay. Gregory says, can you help me be an angel investor? Let's see. And Ali's going to help there. Cool. Nice, Ali. It sounds like you made a... Oh, okay. I misunderstood also, Ali. Can you help me become an angel investor? Oh, you mean like you're not, but you want to... Oh, so sorry. There it says, all good. I'm looking for an investor to invest in the idea I have so I can become an investor. Gotcha. Okay. Well, you're in the right place. I mean, yes, I guess so. Ask more specific questions next time and come on camera and we can discuss them that day. That's the short answer. But there are plenty of courses on being an angel investor these days if you want to explore that as a career opportunity. But as you suggest, it takes some capital. The good news is that the minimums have come down. 5 years ago, or certainly 10, you had to be an accredited investor and have several $1 million, or at least $1 million of net worth. I forget what it is, but you had to have some actual money, right? And minimums on investments were probably $50,000, $25,000 at a time. These days, you can get involved for sometimes only $100, $50 even, or certainly $1,000. I would go and look at Angel List, and at WeFunder and Start Engine and Republic and Seed Invest, all the crowdfunding platforms. You can get a lot of experience just $100 at a time, and learn learn the ropes and continue to participate there. So okay, what do you feel like is the best way to build a strong team? We got a lot of questions today. Let's see. Best way to build a strong team. Many of my coworkers. Oh, you know what? I always forget to do this. Here, let's do that. Hey, look at that. Aren't I clever? Okay, now I can read it with you. What do you feel is the best way to build a strong team? Many of my coworkers and connections have an interest, but are still unwilling to let go of the higher paying tech roles in this economy. Yeah. I need to sign off here. I'm still here, but for our podcast listeners, it sounds like I only scheduled this for 90 minutes, and here we are, 90 minutes. So thank you all for listening. We'll see you again next month. I'm Scott Fox, and we'll be back with Startup Office Hours again soon. Thanks for listening. Okay, that was just for our podcast listeners, guys. Still here doing the live stream video. So, yeah, they have an interest but are unwilling to let go. Well, there's two kinds of people in the world, Neil. There are entrepreneurs, and then there's everybody else. And those of us who are entrepreneurs, well, we're kind of knuckleheads. We're kind of like the artists of the business, right? A real artist doesn't paint because they're paid to. They have to paint, right? They have to sculpt or make jewelry or dance or whatever it is. Entrepreneurs are the same way. I just have to solve problems. It's something I do. I keep a pad of paper by my bed, and at night I jot down things that occur to me about things I could or should be doing. It's in me. And you can learn that, but a lot of it's just the way you're wired. So I'll be covering some of this in my next book, actually, because you don't have to. It's not just genetic; it can also be learned as a mindset. But I wouldn't try to convince people that are not interested. It's you're pushing the river. That's a hard thing to do. There are plenty of people who are interested, and I would spread your net a little wider and see who's out there. Go to 1 Million Cups. Put a question in the chat room right now. See who wants to come play with you, right? There are plenty of people, and given that things are so remote these days, I mean, through Zoom and so forth, you don't all have to be in the same room anymore. And I think you might find it easier to find the people that are pre-sold rather than trying to sell people on a lifestyle change that, a lot of people are just more security oriented, right? So, maybe they'll come along later, right? They might come along later, and you can give them some stock, and it'll be less stock, right? Their loss. Okay, let's see here. Oh, okay. Well, you answered your own question there, Neil. Sorry, I didn't scroll down. I work at Oracle, and my friends at Amazon, they're scared to take a chance. Yeah, go after untapped or undiscovered. Yeah, or find ways that they can participate in small bites, right? Just on the weekend, sort of thing. You're getting paid well, right? I had real jobs. I didn't start out doing this when I was 21. I was an investment banker. I was all about the money and security, right? I had a big job on Wall Street. I did very well, suit and tie, the full deal, right? And I did that for years. And then I went to grad school and had other big jobs. And it took me. I think I was 30. And when I finally realized, I hate this, and really recognized my true colors, came over to the dark side as an entrepreneur. And don't forget also, another thought is, not everybody wants to be the CEO either, right? So if you're looking for a co-CEO, that's different than looking for people who can be on the team, right? And you want to feed people what they want to eat, right? So not everybody needs to be your co-founder and have the same level of risk as you. They can still be important members of the team part-time and at lesser commitment. And you need to allow for that because it's life. Okay, moving on. I'm going to have to wrap up here. Okay. All right. There's Athena and Gregory. Nice chat going on. Okay. Ali says, how would you best describe the level of involvement you like to have when you invest in a company? And also, what do I look for personally? Okay. Sorry. Let me just see how many more we got here, Ali. Okay. It looks like we're getting near the end here. Okay. So, all right. I guess this will be our final, maybe our final question. So what level of involvement? So every investor has a different level of involvement and expectation. This is not surprising, right? Everybody has a different background. They have a different family situation, a different level of assets, all the things that contribute to everyone's life being different. And that comes to play as an investor as well. So some people want to be really involved and some people don't. For me, and I think this is probably true of most angel investors, you want to be involved where you can add value. And so that means getting involved in either companies where you have expertise so that you can contribute, or at least something that excites you. Like, nobody had crypto expertise 10 years ago, but I did a bunch of crypto stuff. And then, it led to more involvement and then eventually investment in crypto as well, because it was a new thing, right? I think everybody's different, and that's one of the things you're looking for, honestly, as a founder. When you meet with investors, you want to figure out who gets excited, whose eyes light up when you talk about this stuff. That's who you want. And the downside is they might be all over you, and the upside is they might have a bunch of money and want to get involved, and you have essentially a partner. There's no solid answer on that. I guess what you more on the do's and don'ts. Let's talk about the don'ts. Is you don't want people who are going to put in money and then meddle, right? Either meddle in terms of operations or control or branding or whatever, or they want you to hire their nieces and nephews or whatever. That kind of meddling. That happened to me one time. You don't want people who are going to need their money back real quick, because ventures take years. Maybe like 5 or 10 years, they have to be patient, and they have to be friendly, easy communicators, and people that you want to have a beer with. I mean, honestly, that's what it is. So finding people who are down to earth and you want to hang out with, especially at the early stage, you're going to be involved with these people for years, like longer than your friends from high school or college. You're going to know these people, if things go well, you're going to know them for 5 or 10 years or more. And if things don't go well, you may know them for a shorter period of time, but things don't go well, and things could go ugly, right? And then you got to be sure that they're, even-keeled, reasonable people who, will let things play out in a reasonable way. I'll just be a little careful. And this leads back to my repeated thing you've heard a lot today is researching the people you're looking for. You're looking at to invest, getting to know them beforehand. Don't just pitch every schmuck that says they're a VC. There's a lot of knuckleheads out there, to put it nicely. And I would be careful. For me, particularly these days, I invest mostly through syndicates and groups because I just don't have the time to get personally involved. I'm on enough boards already that I'm not looking to get directly involved. I'll make the offer again if anybody wants to pay the freight. The only way I can manage my time is by charging. I do personal coaching calls, though. It's on scottfox.com. If you got a few $100 and you want and you want some advice, I do a couple of those every week. Happy to help you strategize, but I'm not likely to invest personally. Don't book a call for that reason. I do all my investments through groups that do due diligence for me. So, okay. Wow. So running out of energy here. I'm going to have to get some lunch. Startup Investors Directory. If you guys want to check it out, startupinvestorsdirectory.com. The beta tester code is half off. It's bronze beta 50, bronze beta 50. That won't be good forever. Obviously, this is going to turn into a real product, and the price will go hopefully up and so forth. And I think we are about done. Wow, that was a lot of talking. So if you have been here today and you had a good time, would you please do me the favor, on LinkedIn or YouTube or wherever it is you are, click and like and follow. That makes a difference. Even if you never come back, just say thank you by clicking a few times. I would really appreciate it. And like and follow and join that the email list you see scrolling there, and tell your friends. Even if you're done with this and I've now convinced you never want to be an entrepreneur, you can tell your friends when they get crazy and want to be entrepreneurs, tell them to come over here and we'll try to help them too. So thanks for being here. I appreciate y'all spending your afternoon with me. I know there's lots of places you could be, and hopefully this has been useful to you. There you go. Let's get out there. Go entrepreneurship. Let's make it happen. Thanks.